Hey guys, it's Matt, your mortgage guy here today, and today we're going to talk about mortgage rates and why they don't need to be as scary as everyone makes them out to be. The big thing that everyone fears is, what will be my interest rate? These change daily and no one really seems to know what kind of determines them, and I want to give you guys an inside scoop on rates and what that means for you. First, how are rates determined? So there's a myth that mortgage rates are based off of the 10-year Treasury note. They're actually based off of the bond market. Sometimes the Treasury will actually move opposite to where the bond market is. The secondary market, or bond market, is where mortgages are then bundled into groups of similar mortgages and sold. This is where your loans will usually get sold to after a year or two. These bundled securities will go up and down in price based on national and global events. For instance, today's rates, we're at a year low right now. That's because there's a lot of uncertainty with the trade war with China and the economy's taking a hit. The biggest thing that affects your interest rate is going to be your credit score. And this is the big kahuna. The model that lenders use to look at your credit ranges from a 350 to an 850 score. The higher your score is on this scale, the better your interest rate will be. Mortgage lenders will usually work with people with a 580 credit score or better. Banks will usually sit around a 620, mortgage brokers 580. Some can go down to 500, but it's rare. Usually the rate will get better for every 20 to 40 points your credit goes up. The big breaks on pricing are going to be around a 600, 620, 640, then you go up to 680, 700, 720, and 740. Once you're over a 740 credit score, your rate is not going to get any better, no matter what. That is the best of the best, the red carpet. You are perfect. Another thing that goes into affecting your interest rate is whether it's a purchase or a refinance. So, purchasing a home will give you the cheapest rate that's available. This is the best time to get a long-term, cheap interest rate. I have to say, this is my personal opinion. It's not a requirement, it's not a statement, anything like that. But sometimes you want to refinance your home. Interest rates have gone down since you bought, you want to pull some cash out, various reasons like that. Refinancing will usually have a slightly more expensive rate, usually anywhere from an eighth of a point or 0.25% higher to up to half a point to 3/4 of a point if you're pulling cash out. These rates are based on your current market, your loan to value, and your credit scores, not the interest rate you previously had. Another thing that affects your interest rate is going to be your loan to value, or your LTV. This is based off of the value of your loan to the value of your property. This is determined by an appraiser and also what your current loan is. An easy way to think about this is, how much did you put down? So say you buy a $100,000 house. You put $20,000 down, 20%. So that means you're at 80% loan to value. As a general rule, the bigger property that you buy, the cheaper the interest rate you're going to get, until you get over the county loan limits. Then you get into jumbo pricings and other stuff, makes it a little bit more complicated. We'll get into that at a later time. There are things that affect your interest rate that are out of your control, such as trade wars, tariffs, and other economy-based things. Like the game of golf, you want the lowest score, or rate. So buying points is like erasing a shanked stroke. So one of the things that goes into what your interest rate will be is, what are you buying? Are you buying an investment property? What about a primary? Or even just a single family home versus a manufactured? Depending on the type of property you're buying, that can affect your interest rate. A primary residence versus an investment or a secondary home will change your interest rate. Usually there's around a half a point difference in rate between an investment and a primary. A second home will be a little bit in between. Thank you guys for checking out the video today. I really appreciate it. Up next, we're going to talk about points and a little bit more in depth on that, and then we'll have a couple videos coming out here shortly as well. Thank you for staying the whole way through. Leave a like, share, subscribe. Say hi to the puppy. Have a good day.